Frans wanted us to look at Sasol. Now, we've previously warned time and time again about that, and I'm going to draw it in here, head and shoulder formation. Again, a head and shoulder formation should not be ignored. It's a warning formation, especially on a weekly graph, especially when it was built over such a long period. Now, that neckline weighted there around 382 Rand, and when that changed into a resistance on a weekly close, it was confirmation that you had to sit up and take note. Now, for a couple of weeks, that share could not change that trend line, that neckline of the head and shoulder formation into a support again. And that was confirmation of goodbye kisses. So it tried to kiss the neckline, could not change it into support, and retraced again. And ever since then, it's just been one momentum or one decline to the bottom. Now, we know that the full target of this head and shoulder formation is 180 Rand on Sasol. But now, since that week, from the week of the 12th of August, the shares started to consolidate. It stopped making lows, and it tried to just find and breathe again in this band. And this week, with that breakaway gap, it was closed in this week. But when the attack on Saudi Arabia's oil tankers, Brent oil, the oil prices just spiked to higher levels, and we could see that on Sasol. It opened a lot higher than, on Monday morning, and now we've got a candle with a long upper shadow. Now that implies selling pressure. Now the confirmation of the consolidation band was around 286 Rand 78. That full confirmation played out to the high there of around 316 Rand 60. But now the big test is, will that momentum above 286.33 remain in place? Yes, the share can easily retrace, but the ideal situation would be if it can retrace, but it won't go as low as 260 Rand 15, or definitely not as low as 234.40. When the share retraces and finds somewhere a support and bounce again, a higher low will be confirmed, and that will be seen as positive. This candle with the long upper shadow, unfortunately, it's not at the top of a rally, so I can't call it a shooting star. It might be an inverted hammer candle. So an inverted hammer candle appears at the bottom of a downtrend. Now, it might be a turnaround candle, but the confirmation will only be in the following candle. If the next candle is a bullish engulfing or a strong belt hold line candle, I might say that this hammer is hitting out and preparing the stock for higher levels. But this is a weekly graph. The candle is still in the making, so I can't say that yet. My stochastic indicator is in no man's land. It's around 28. It has broken upwards from oversold levels, but we can see that this blue moving average is a little bit pop. It looks like it's running out of steam, and that is not positive. I would like both these averages to still point upwards in a strong trend, and it's not doing that. It looks like it's losing steam, and that is negative, and that also confirms, obviously, this possible inverted hammer candle. So let's see what it does, Frans. Let's see if it pulls back and finds somewhere support, hopefully not as low as this level, as I've mentioned there, around 260, and then hopefully finds enough buyers to lift the stock to higher levels again. Now, if your position size is small enough and you haven't overexposed you to the share, you can maybe add to the position depending on where you've bought previously to maybe average out. But if you want to use a stop loss, I would use these lower levels there around 259.84 or 260. Below those levels on a weekly close or even on a daily graph, I would be very hesitant, because we could see for 5 weeks the share found strong support there, which is obviously a strong support levels for buyers. So if the buyers stop protecting this share at those levels, I will be very nervous and start to take note. Jonathan wanted us to look at the dollar rand. Now, I don't think any of us thought that the rand might be so strong during these times, but it's clearly because of a lot of things, the weaker dollar, etc. But we've previously mentioned that this double top should be taken note of. We've mentioned triple tops, double tops, head and shoulder formations. They are all warning formations. But take note, the 40-week moving average on the dollar-rand pair is still a support. That tells me that the long-term sentiment is still weakness. Only when the rand starts to consolidate below 14 Rand 34, well, can I say, Christelle, you can expect a lot stronger levels on the rand. Now, this double top formation will only be confirmed when around 13 Rand 87 changes into a resistance on a weekly graph. Now, what does that mean? It means that this possible double top, if that 40-week changes into a resistance, and if that neckline there around 1384 is confirmed, it can take the rand back to around 1233. And I know it sounds impossible. And just bear in mind, when we discussed the head and shoulder formation of Sasol at the time, nobody thought it will go back to around 285 levels. So please take note of these warning formations. They should not be disregarded. So your first indicator will be that 40-week moving average. What does the rand do when it gets there? My stochastic indicator, if I zoom that out, is in no man's land. It's not overbought or oversold at the moment, sitting there at a 52. But it still shows me both these moving averages are pointing downwards. There's still a lot of room for downside, so I can easily see more strength in the rand. But we know on the daily again, it can easily bounce because of the retracement we've seen. So only when the rand starts to consolidate below that 40-week moving average can we confirm further strength. But at the moment, we are still in the trending range. As long as the rand consolidate below that 15 Rand 48 level, we can see more strength. This formation, this double top, will only be wiped off the table when the rand starts to consolidate above 15 Rand 50 against the American dollar. So at the moment, strength, but for the longer term, weakness because of that 40-week moving average. And keep in mind that strength, that support line there should be taken note of should the rand even strength as low as that 1388. So hope that helps, Jonathan, with the levels to make a decision. The S&P 500 has got two formations on it, which makes it extremely confusing and difficult to make decisions. But we've got a clear rising wedge formation that has been, the S&P 500 index is caught within these two trend lines. Now, a rising wedge is a negative formation. Why? Because if this lower band changes into a resistance, and if I project it, it would be there around 2,947. If that changes into a resistance, it can easily go even lower to around 265 if I project just the mid-width of this wedge to the downside. But we also have a possible inverse head and shoulder formation here, which means if this index starts to consolidate above 3,045, it can easily take this index to a brand new record high of about 4,000. So we've got two formations within one graph, which tells us it can easily completely disappoint to the downside, or it can easily surprise to the upside and reach for new record high. So what does one do? One, the stochastic indicator, one of them is in overbought territory. So it means that the likelihood or the probability of a downside is more likely. It is possible. So we take note of that. And the second one is our candles. And at the moment, our candles are still showing positive. It's still upwards. It's green candles. I've got long lower shadows. It tells me that the buyers are in control and that they want to protect this index. So what is the levels to watch for? The first one, if I project it here, is there around 2,934. But also that upper band of that neckline of the possible inverse head and shoulders waiting there around 3,048. And maybe I should just draw in this possible inverse head and shoulder formation. Now, some traders might even say, Christelle, what about two right shoulders? And yes, that is possible. Then you just need to decline that trend line, that neckline a little bit, so it also touches here, so that you have two shoulder formations. So there's my inverse head and shoulder formation that can easily surprise to higher levels. Again, that 40-week moving average is still a support, which tells me the long-term sentiment towards the S&P 500 is positive. And that 40-week moving average is waiting at 2,835. Toby wanted us to look at Weight Watchers. Now, they're listed on the NASDAQ, and everybody who wants to lose a little bit of weight, I mean, they know exactly who they are. Now, we've previously spoken about that falling wedge formation, and that falling wedge formation lead it into a consolidation phase and then some nice upside. But more importantly, that 40-week moving average has now changed into a support that is seen as positive. Yes, my stock is overbought, which means the probability of the share to reach for lower levels is more likely. So I need to be careful, Toby. I don't think this is the ideal time to enter into Weight Watchers at the moment, unless you want to chase momentum, which is never recommended. But then that 40-week moving average, and look how closely that is to that trend line there, that is made up of that upper band of the consolidation phase. And that highlights the importance of these levels. And that is waiting there around $25.60. If you want a closer stop loss, you can use $31.15 to chase the momentum. But it's never recommended to chase momentum when a stock is this overbought, especially on a weekly graph. Because on a daily graph, it might look a lot different, but on a weekly graph, it's dangerous to start to buy a stock when it's that overbought. Why? Because we know that never does any instrument just go up in one line. It makes pullbacks and then it rises again, and it makes pullbacks and it rises again. Why? Because the traders take profit. So there are a lot of people who trade maybe CFDs in the stock, and then they take profit. They're happy with their rally. And as they take profit and they start to sell the stock, the share makes a breather again, it pulls back, and that gives an opportunity for maybe long-term investors that is waiting for that stochastic to become oversold to buy into the stock again. But Toby, I hope you bought the share when we called it months ago because of that falling wedge. Nice consolidation phase. I hope you didn't lose heart in that consolidation phase. Look how beautifully that 40-week moving average has changed into a support, and hopefully we can see higher levels. As long as that 40-week moving average remains a support, the momentum to the top is in place. Mohammed wanted us to look at the Altria Group. Ticker MO, listed on the New York Stock Exchange. Mohammed, the momentum to the bottom is clearly in place. And you know the saying, don't try to catch a falling knife. Don't try to buy the stock. Wait for the share to stop making lows. Wait for a food to form. Wait for some sort of consolidation base or a turnaround candle that tells you, hey, the buyers are back. They've started to protect the stock. The time is not now. We can see that the share is clearly caught within this descending channel. It might even go as low as $39.13 or even lower. Yes, it is very oversold, but it can still remain low, and still the stock decline even further. So wait for those two indicators within my stochastic indicator to start to break upwards. That would be positive. Wait for a turnaround candle on the graph itself, and then it can easily maybe find support there on that trend. Like it did in the past, we can see that this trend line confirms that these are strong levels on Altria. I think when it does find support, it can be a nice share for upside. It honors every time this support level, and that is seen as positive. Now take again a note of that 40-week moving average, that red line. Every time the share could change it into support, only for a couple of weeks remain above it and decline, and that is seen as negative. Hope you enjoyed the show. Speak to you soon. Have a lovely week. Cheers.